and it would be great if you could provide me and the rest of the folks in the room here just a little bit of background on your firm and your engagement and why you got engaged in the digital asset space, and in particular, kind of what were you seeing in the market and what opportunities really factored into the decision to launch and or get more proactively engaged in this space. So, and just to let you know, most of my questions come in the form of multiple questions in one question, so apologies for that. But David, you want to start, and then we'll kind of go from there?
Yeah, so hi everyone, David Fragale. So I lead the digital asset banking group at Western Alliance Bank. Western Alliance is based in Phoenix, Arizona. We're a top 20 US size bank. Actually the fastest growing bank in the US over the last couple of years. And my business is to do one of three things. It is to do three things. One is to bank the industry as much as possible. So over the last 4 years, we've been banking over 100 at this point crypto companies like your names like Coinbase, et cetera, stablecoin issuers, Secondly, it's to build with blockchain technology. And then third, it is to actually give back and invest in the industry. So we've been able to make some strategic investments into various venture capital firms that are also deploying capital to portfolio companies, many that are here at the event today. So that's what we do, that's who we are. And like I mentioned, top 20 US bank size, so much larger than the likes of the Silvergate, actually more like 8 times the size of Silvergate at their peak. Silvergate Bank actually 4 years ago almost acquired, well more than 4 years ago, but before I joined the bank, almost acquired my last company, and we were a cross-chain atomic swap protocol. So we were looking at using the blockchain itself as a mechanism in which economic value can be transferred without the use of a centralized entity like a bank. And that was a very interesting product. We actually connected the Bitcoin blockchain to the SEN network, if anyone's familiar with SEN. That's the movement of, a SEN customer could send cash to the other party to settle their crypto trade, and the Bitcoin trade itself was actually watched by the bank. We did that as a prototype, and then Silvergate attempted to acquire us. So my background's in that world. So for the last 10 years, I've been in this space, and through the lens of Silvergate, knowing them very well, and also being a CFO and a COO in the industry, how difficult it is to get banked and the opportunity there is for a bank, it was the right moment for me to actually step in and help institutionalize this industry, also stick up for the industry. So for the last 4 years, we have been banking when the others are getting debanked, and those customers were making their way to us. Finally, in March of 23, when Silvergate, Signature, and SVB went down, I had 300 customers knocking at the door trying to come in, and we ended up, really just taking 10%, so probably 30 I was able to bring in, just big names, great names, good quality, and much of that went to some other banks that ended up, with consent orders and cease and desist orders. And I think for us, it's just applying a very high standard for who we bank, but this industry is bankable, and we've effectively stood up for the industry for the last 4 years and continue to do so, and just want to be there to help learn and innovate where we can.
Paul Neuner, CEO and founder of Telcoin. So we wrote the second crypto banking law in the United States in the state of Nebraska. That was the journey started in 2020. We've just got approved, the first approved for a charter a month ago, and so we're opening up there to issue, with our cross-border payments as our stablecoin use case. So we're also opening up sort of EMIs and other licenses around the world to try to get as many people tied to natively issued digital cash stablecoins as we can. We really have always looked at it as not a stablecoin as a doorway to gamble on Bitcoin, but the actual future of payments and banking, enabling the digital equivalent of handing a merchant a $20 bill that doesn't necessarily have to identify yourself or involve your bank, and also just empowering the consumers to be able to stake in and out of different financial products at different banks without having to drive 30 minutes down the street and open another account. So really happy. Obviously, we've been working at this since 2017, and super excited that to be working very closely with the House Financial Services Committee on the finalizing the bill and the Senate Banking Committee. And we're here, and it's really surreal and very exciting.
Greg?
Thank you. So USBC is US Bank Coin. Folks know what central bank digital currency is. Everybody's talking about stable coins. If you watch The Matrix, that's the blue pill and the red pill. But we suggest there be a third pill, which is same technology as stable coins, but actually issued directly by banks. So that's deposits with full FDIC insurance, Reg E protections, guardrails of consumer protection, but issued directly by the banking system. Okay, so that's it. USBC, we bought a nationally chartered bank last year. Vast Bank, OCC chartered, Fed holding company. And so the real question here is, what do banks do when stablecoin issuers are out there sucking deposit volumes into that one-to-one network? What does the banking industry do to respond? And we're suggesting it would be deposit tokens, which would let there still be a fractional banking system in the United States. Otherwise, if everything's one-to-one, where's the credit going to come from to support mortgages and all the other lending activities in the United States as a vehicle for economic growth? So this would be the banking industry's response to stablecoins and central bank digital currency. That's what USBC is.
Let's talk a little bit about the regulatory environment over the last several years, and you're all, engaged on a daily basis in highly regulated activities. Given the challenges that multiple firms, including many in the audience, have faced over the last several years, how have you guys been able to effectively navigate some of those challenges? What's helped to keep kind of the wind in the sails, so to speak? And does the current climate present greater opportunities to your firm and the services that you offer? Again, 3 questions in 1 question, so good luck.
Yeah, I'd go forward. So, March of 23 was obviously a moment for the banking industry, and many of the crypto companies did suffer from that with the debanking. I think for us, it's been a very measured approach to the business that we're in. It's taken us at least 18 to 24 months from the start to build a program that can handle the risks and the various complexities of the industry. I mean, you need to understand your customer very well. That takes talent. That takes people that have been in the industry that can go in and understand what protocol level information means and how these protocols operate around the world. And I think that presents some underwriting challenges, and that takes a team and all the way from the front all the way to risk compliance, technology, and then having the regulators go through and do a review of that program to make sure that you're up to par. And I think our group, we've done that. We've been through multiple rounds of Federal Reserve exams and have had no issues that have been presented for multiple years. And I think that has been a key aspect of what we do: crawl, walk, and run. And it requires a level of discipline when opportunities present themselves, like we saw in March of 23 to bank many customers. We had to say no to quite a bit, and I think that was the right move. So we've just been very measured in our approach. And then I think it's also working directly with the customer. So in our case, we bank over 100 of the crypto names that we all know here in the US and around the world. I think it's working directly with them to understand their needs and to build product that give them immediate value. There are no shortage of science projects, so to speak, in this space all around the crypto industry. Not to innovation, it requires those types of projects. I think for us, it's deliver value immediately and then continue to find opportunities to expand and grow over time with the realities of being a bank. And I think that's a interesting problem to solve, and that's what we do. So that's how we've navigated it. But I think it's just being, Jackson, it's just being highly measured, highly in tune with the market, being in constant conversation with the regulator, and that's what we've had to do. And I think for us, it's just been going as far as we can go within the regulatory framework.
So we started our journey 8 years ago, and we received our first regulatory license in Singapore as a major payment institution from the Monetary Authority of Singapore. The problem we ran into, though, was that even though the central bank gave us a license, no bank would touch us there. They were all, standard chartered. HSBC got massive fines from the U.S. government, and so they really needed to see what we're seeing now finally in the United States to be able to bank even a fully licensed institution, financial institution in Singapore. I think the good thing for that was, for us, is that we're 8 years into building a very, very solid, mature compliance system. But basically around 2020, we realized that we should turn to the United States and we need to become a digital asset bank as our foundation. And I remember our Singapore attorneys at that time were actually joking with us that they thought it was going to be easier for us to establish a digital asset bank in the United States and branch it to Singapore, that was going to be easier than opening a plain old bank account in Singapore. And we were laughing at the time, but you know what? I think it's turning out to be true. So, yeah, that's we're excited now.
Awesome. Greg?
There used to be 50 to 100 new bank charters a year before 2008. Since then, it's been a trickle of 1 or 2, and those are all pretty much special situations. We've been living in fear and living in a period of what could go wrong as opposed to what could go right. Obviously, there's been a sea change. Better to be lucky that we have some of the pieces. So to us now, the pieces of the planets look aligned more than they've ever been in history. And so the statement that the U.S. should be a leader in the U.S. dollar and that crypto should be the rails that it should run on is a really, really compelling vision. And so we've gone from an environment that was Operation Choke Point to, if you look at the executive decree out there, it says open banking and fair access. Now, everybody can read those words differently. The way I read them is it means that it's the user's money, and banks have a strategic and ethical imperative to make, if the user wants their money to be accessed by some third party, that's what open banking is, and fair access means, hey, if it's legal and it's licensed, it's going to be banked, not just in the United States, but all around the world. And that is consistent with an imperative to make the US dollar the dominant currency in the world. And so big question out there is, if you're going to have stable coins, it means friends and enemies are going to be holding them. And so the question we have is how to do that. I mean, we can do it with stable coins, sometimes without identity. We could do it deposit tokens with. But either way, we're looking to play to win. And that administration and all of one party and a lot of another party are kind of getting on board with that mission. And that has been a sea change. I cannot think of a time in our industry where there's been as much change in the last 12 months. So this is an opportunity time. Sure, there's going to be perils, but if you look at the vibe and you look at the fact that there's 40 congressional representatives at this conference, many of them speaking, this is it. We're at a historic event and we're at a historic time.
All right. Thank God. So I realize that the title of the panel is called the Future of Banking. We haven't even touched on the future yet. So in the remaining minutes that we have here, let me just put it out there. Where do you go from here, right? You've arguably successfully navigated the last several years of regulatory challenges. Where do the opportunities lie? Do you see areas of emerging challenges to your business or business models? And kind of, where do you go from here?
Yeah, I think from my vantage point, the future of banking, I think on a long enough time horizon, a bank looks more like Coinbase than it does, JP Morgan. I think that's the next step. I think we're going to see a lot of that. But Coinbase is still centralized. So I think moving beyond that, I think banking on an even longer time horizon, maybe not too much further because it's probably a geometric goal. A geometric curve is that it looks more like Uniswap. So I think the DeFi vision is something that I have. I think blockchains themselves are public utilities. I think they need to be utilized that way. I think there are inherent properties in a blockchain that are duplicative with the current banking system. And I do think that in a long enough time horizon, we're all participating in a much more democratic system in which we can all participate. Fair and open banking, like Greg mentioned, can be available to everyone in a non-custodial manner. And I think that's a vision that many in this industry have. I think we're operating with two parallel systems right now. I think those parallel systems will converge at some point. might be accelerated by AI as well. But nonetheless, I do think that that's the world we're going to be in. The demographic shift that we're going to experience with the younger generation that's much more digital native than most of us in this room will also demand more of a digital product, and that's going to make its way, and that will eventually move us off of, we're at a tipping point, we'll move off the existing banking system, move over to this DeFi or blockchain-based system, and I think that's going to happen in probably our lifetime, but that's how I see it. I think we're just parallel systems right now, and they will converge soon, and it's going to be really hard to compete with the traditional centralized bank model if you're not embracing this technology and starting to disrupt yourself. And so that's kind of my vision on it, but I think many in this space recognize that it's highly disruptive and it's going to change a lot of the different ways in which we bank in the future. And what is a bank, right? Bank, I think, will eventually become more of a platform, a depository institution that's FDIC insured, that then these apps like a Coinbase can sit on that, and that becomes a much better experience. So,
along those lines, yeah, we see this going from hub and spoke to the internet of money, you know. And listen, if you want a Mexican or a Kenyan to hold U.S. dollars, you got to issue an electronic peso and Kenya shilling, and so that's what we're doing. So our goal for the end of 2025 is to have 3 billion people in our addressable market where we're issuing local bank account numbers flowing into natively issued digital cash stablecoins, and we think we can do that. And the most important piece of that puzzle is federal legislation to give us that kind of backstop with central banks globally.
So look, the U.S. is the most trusted financial system in the world. So I'm not talking about throwing it out. We have great ACH rails, wire rails. We've been given a false choice. You either have to have this old legacy world or there's this new world. I don't understand that. There was a time when we had CDMA phones and GSM, and then somebody just said, why don't you put both chips in the phone? Or there used to be 110 or 220 volt laptops and you blew it up if you plugged it into the wrong thing, and somebody made it dual voltage. So the question is, why can't we have both? Why can't the same ledger that a bank uses and has an account number, why can't it also have an address on the chain? So when you're moving money and it's better to use it through the traditional rails, that's fine. And when you're moving money and it's better to use it through chain because it's 24/7 and it's global around the world, it's the same dollar. It's just double addressed. And so we're going to build that technology. It's not an either or choice. It's both. We'll get the best of both worlds. We don't have to take the blue pill or the red pill. There's a green pill.
Can I ask one last question? I know we're dwindling on time here, but the recent OCC guidance that came out, when you looked at it, when you read it, what did you think? Does that, is the sky the limit now, or are we still, straitjacketed, or are you still straitjacketed in some way, shape, or form and participating in the digital assets?
Well, Fed member banks are, it's an SR letter, so we'll see when that actually comes out.
Yeah.
But yeah, obviously it set the tone, and I feel like you should comment more on this.
Yeah, look, it's a tone shift for sure. I think the removal of the non-objection process, I think, is a big step forward and signal. But we operate under the Federal Reserve and that system in terms of the regulatory body. But we do also have an OCC charter as well. So I think it's a tone shift. I think it's a step in the right direction. It takes a while for all that to ripple through the bureaucracy for us to see it live. But I think it gives us a signal for what's to come. I think, again, you can only approach the boundary. You can't exceed that boundary, and as soon as you exceed that boundary, even if it's arbitrary at the moment, you can run yourself afoul pretty quick. So I think, especially with this industry, so we try to stay as close as we can to that edge. But I do think that edge is going to move for us here soon.
So there's definitely a tone shift, and there's been some personnel changes at the top, but as a former member of the deep state, I am from the Federal Reserve originally, the memo has not necessarily been gotten at all levels of the deep state. And so while the top of the deep state might have been decapitated, folks down in the trenches, like certain examiners, everything I've just talked about to you. They look very smiling at me and they say, Greg, I have no idea what you're talking about. And they say that in perfectly good faith, and then there may be some in bad faith. So it does take time for this to trickle down. And I do believe the tone that was set is, instead of this being one guy's policy replacing the other guy's policy, we need to get legislation in place that's going to be bipartisan, and I see a potential for that. This will stick this time.
Gentlemen, thank you very much for your time. Thank you, everyone, for coming here.